Welcome back once again to LearnCity lecture. We are going to talk about the double declining balance, the DDB. We are going to talk about the depreciation method, and we're going to understand the definition and the applied formula. Let's go into the introduction to depreciation. Depreciation. Depreciation is a fundamental concept in accounting and finance that allows businesses to allocate the cost of tangible assets over their useful lives. It reflects the gradual reduction in the value of an asset due to wear and tear, obsolescence, or any other factors that led to a decrease in its economic utility. And one of the most commonly used depreciation method is the double declining balance, acronymically DDB method. In this lecture, we are going to delve into the details of DDB depreciation method in its characteristics and how to calculate it. Understanding the double declining balance DDB method. The double declining balance method is an accelerated depreciation technique that allows businesses to expense more of the asset cost in the early years of its life and less in the later years. It is called double declining because the depreciation rate is double the straight line depreciation rate. Let's go to the key features of double declining balance, the DDB depreciation. Number one is accelerated depreciation. Double declining balance DDB is known for its accelerated nature. It is ideal for assets that tends to lose value rapidly in the initial years of use, such as technological equipment and machinery. Number two is decreasing book value. Under DDB, the book value of the asset decreases over time, thereby reflecting its diminishing worth. The third one is not suitable for all assets. While DDB is effective for some assets, it may not be the best choice for others, especially those with a long-term and stable useful life. Having talked about those, let's go into the advantages of double declining balance depreciation, DDB depreciation. The DDB depreciation method offers several advantages for business. We are going to take them one by one. The first one is front-loaded expense. DDB allows companies to expense more in the early years, which can help in reducing taxable income and managing cash flows effectively. The second one is the matching principle. It aligns with the matching principle in accounting, where expenses are recognized in the same period as the related revenue, providing a more accurate representation of financial performance. The third one is reflection of asset value. DDB closely reflects the actual declining value of assets, particularly those assets to rapid obsolescence or wear and tear. Although DDB has advantages, but there is a need to talk about the limitation or the demerits of DDB balance depreciation. And despite its advantages, the DDB depreciation has some limitation we need to consider. Number one is overstating expenses. DDB can overstate expenses in the initial years, which might not accurately reflect the asset usage pattern or actual economic benefits. Another thing we need to take into consideration is cumbersome for long-term assets. It may not be the best fit for long-term assets with stable and consistent value changes, as this relates in excessive depreciation in the early years. That's about the advantages and disadvantages of DDB. Let's go into the conclusion for all the mentioned points we've talked about in this lecture. The concluding aspect of DDB, which is double declining balance depreciation method, is a valuable tool for allocating assets cost efficiently. Its accelerated nature and ability to reflect the true diminishing value of certain assets makes it more suitable for businesses facing rapid technological changes or heavy asset usage in the early years. However, it is essential to weigh its benefits against its limitation or disadvantages. And there is a need for us to consider the specific characteristics of the asset in question before deciding to adopt the DDB depreciation method. By employing appropriate depreciation methods, businesses can maintain accurate financial records and make more informed strategic decisions regarding asset management. And for this, we've come to the end of the lecture. Thank you for watching.